Okay, hello guys, I'm back again with another YouTube video. So this time I will be analyzing um GJ. Okay, let me just delete this. I'll be looking at GJ, uh, user, and gold, a bit of gold, and maybe Nasdaq. Yeah. Okay, so I'll start with GJ. As you know, we start from the daily chart. One candle here represents 1 day of trading. Okay, so I will uh, mark my highest high in the current market, and I'll also cater for my lowest low in the current market. uh, get this. Okay, so after identifying my highest high and lowest low in the current market, I will now look and try to identify the general direction on the daily. So I see that GJ has been bullish um basically for like forever now, since 19 March last year has been bullish. How do you know that the market is bullish? Simple. The market is bullish. We know the market is bullish when it forms um uh higher highs and higher lows. So we have a low here, we have a high here, we have a low here, we have a high here. This high is higher than the previous high. This low is higher than the previous low. We have a low here and a high here. This high is higher than this high here. This low is higher than this low. So when the market is moving like this, we call it a bullish market. When the market is making higher highs and lower highs, we call it a bullish market. Okay, so I identified that we've been in this uptrend, and then when the market got to this price action here, it relaxed. We can see that this low is more or less equal to this low, something it hasn't been doing since last year. We have lows that are more or less on the same price point, on the same support. Okay, then from there the market continued its bullish momentum. So immediately we can see that in this kind of market we are bullish. It doesn't make sense to look for sells in such a market. um I hope you guys know the golden rules. So we have golden rules: buy in the direction of the trend, buy low, sell high. So if you apply these rules, you really wouldn't look for sells in such a market, only buys. Okay, so now I go on the lower time frame to try further analyze price action and look for possible entries. Okay, so I can immediately see let me just I can immediately see that the market has been respecting this trend line here. I put in my trend line and I see that the market has been respecting. Whenever the market touches this trend line, it likes to reverse, touch, reverse, touch, and reverse. And notice how this reverses are pushes, are bullish pushes, are impulse moves. Whenever the market touches this trend line, it gave us impulse moves. Touch, impulse move, touch, impulse move. So I'll try give this a twin brother and have some sort of a channel to trap price. So on the upside, same thing. Whenever the market touches this trend line, whenever the market touches this trend line, it likes to correctively reverse. So it reversed correctively, touch, touch here, reversed correctively, touch, and reversed correctively until price broke out of this channel. Okay. Okay, guys, I am a great fan of Falcon FX. Just I'm a great fan of Falcon FX. You can check out Falcon FX on YouTube also. So at Falcon, they believe that the market moves in structure. Impulse move, correction, third touch correction, impulse move, third touch correction, impulse move. Okay. So the Falcon community believes that the market moves in structure. The market repeats itself using patterns that are repeating, that have been proven to be repeating since like forever. Okay, so immediately I can identify this: impulse move, correction, impulse move, correction, impulse move, correction. That's how the market moves. That's how at Falcon they like to trade the market. Pure price action, no indicator. Okay, so with impulse move here, correction, impulse move, correction, impulse move, correction. Okay, so now looking at the current price, so guys, looking at the current price, we can see that the market was moving in this channel. So the market moved in this channel from 23rd of April till the 4th of June. So on the 4th of June it broke out and gave us a retest and then fell. Then the market went bearish. It was forming higher lows and lower lows. And then guys, I spoke about patterns that are being utilized by the Falcon community. So among the many patterns that they use, well, not many, so among the patterns that they use, they have trend reversal patterns such as a head and shoulder pattern, inverse head and shoulder pattern. So inverse head and shoulder pattern looks like this, this being the neckline, breaks, retest, and then boom. Okay, so I can immediately identify this pattern in the current market. So we have a head and shoulder pattern here. What does the head and shoulder pattern tell us? It tells us that we've reached the end of a push, whether it's a bullish push or a bearish push. We basically reached the end and now we are reversing. So this head and shoulder presented itself here on the 4-hour chart and then kinda completed. So what does this head and shoulder pattern tell us? It tells us that we have completed this move, this breaking out of structure and a further push to the downside. We have completed it. Ne? It tells us that we are done with this move. It tells us that now we are reversing. So after this pattern, we can now expect the market to go bullish again. Ne? So now we can expect the market to go bullish again. Okay. So with that said, okay, let me just delete this for simplicity. With that said, let me go on a 1-hour time frame to see the chart more clearer. Okay, with that said, ne, remember what I said? I said market moves in structure. Impulse move, correction. Impulse move. The correction must be in the opposite direction of the overall push. So if you have an impulse move to the upside, correction must be to the downside. Impulse move in the overall direction. Impulse move, correction, opposite direction, impulse move to the downside. Now look at this. In the current price, after identifying the head and shoulder pattern that presented itself, it tells us that we are now going bullish. Why? Because the head and shoulder pattern ended the bearish move. So now, with that said, I will see this price here as an impulse move to the upside, and I will see this price as a correction in the opposite direction, and then I will see this price from here as the second wave of the impulse move. Okay, let me delete this for simplicity. So now I'll cater for this impulse move here. Well, the impulse move is not really important. I don't have to cater for it. Why? Because we don't want to trade the impulse move. The impulse move must present itself while you're just looking at the market, and then what you want to trade is the correction. So I will cater for this correction. So I will put in my trend line, and the most important thing is to cater for more touches. Cater for more touches. It's useless to have a trend line that doesn't respect the market, or the market doesn't respect your trend line. It's pointless. So as I cater for more touches, I can see the market gave us some sort of a first touch here, first touch at the bottom, second touch. Okay, yeah, this is what I spoke about with my friend yesterday. Okay, never mind this. Okay, so as we cater for this correction, okay, so as we cater for this correction, okay, I'll give the market 3 touches. Okay, so we can see that this is the impulse move, this is the correction, and now we are expecting an impulse move to the upside. Okay, but guys, please note this: the market does not move in a straight line. Even if we know that the market will break this high, I'm 90% sure the market will break this high, but I know that I cannot expect the market to just go boom in 2 hours. No, I know the market may take days or even weeks to get up here. The market moves in structure. making higher highs and lower highs, and then sometimes coming down to confuse people, and then until it eventually reaches this point. Okay, so please note that the market does not move in a straight line. Okay, so let me try to be quick. I'm running out of time. Okay, so we see that the market broke out of the structure. We have three touches here. On the third touch, it broke out and gave us a retest, and then further went up. But it came, but NFP, it came down. Was it NFP? Yeah, I think it was NFP. Or before NFP, the market decided to go a little bit bearish. Ne? But that is not a problem. Why? Because as I go deeper into the lower time frame, I'd like to see this price action here as an impulse move to the upside, and this price action here as a correction. So what does that mean? This means that I'm expecting another impulse move. Ne? Guys, at Falcon, they emphasize patterns within patterns. Notice this. Notice this. We have an overall impulse move correction, and we're expecting another impulse move. Within this impulse move that we are expecting, we have an impulse move correction. We're expecting another impulse move within the overall impulse move. At Falcon FX, they call these patterns within patterns within patterns. And guys, the more patterns we have within a pattern, the more your patterns are agreeing with each other, saying we are going in the same direction, the higher your probability the higher your probability is. Guys, when we're forecasting here, when we're analyzing, the whole aim, the whole point is to increase probability, is to stack the odds in our favor. Okay, so like I said, this price action here is the impulse move. This price action to the downside, I like to see it as my correction. No? So I will cater for this correction. Okay, at Falcon, they believe in 1, 2, 3 touch confirmation. Okay, what that simply means, they believe that the market, that in order for a flag to be completed, the market has to touch it 3 times. Ne? 1, 2, 3 times. Hence the 1, 2, 3 touch confirmation. Okay, so let me be quick. So first touch, second touch, third touch break, retest. On Monday, further push. Okay, now the market is closed, but the market before it closed, it gave us a nice retest. So we have this continuation pattern here, which completed itself. This flag, or whatever it's called, I don't care what it's called, this flag completed itself in the form of a 1, 2, 3 touch confirmation, a typical Falcon FX pattern. So in conclusion, I will expect the market to make a further push to the upside. Remember, the overall direction is a bullish push. Ne? Remember this impulse move. The overall impulse move is this one. This is the first one. Ne? Impulse move correction. So if you are patient, you could expect the market to test these highs up here. At Falcon, there's something called 90% rule. They believe that the market will reach 90% of this higher high here. So 90% should be something like maybe this, yeah, or yeah, this. So to be safe, you can target this price here at 154.76. Very good trade. Um, Risk to reward 5:1, meaning you can lose um 1 rand to make 5 rands. It's a very good trade, excellent trade. Yeah. Okay, now let me bring that back. So, in conclusion, I believe the market will make a push to the upside in the coming week. Yeah. Thank you guys. Should I use the same thing? Okay, I will post a different video explaining Eurozar, gold and Nasdaq. That one will be shorter.